There we go. Okay. So we have a bunch of buyers these days who own their current home. They would like to or are ready to move on to their next home, and maybe they have a bunch of equity in their current home, but they can't do that without selling the current home first for a couple different reasons that we'll talk about in just a second. So our options are, as we know, for them to do a contingent offer, which is somewhat workable. You might tell me otherwise, but today it looks like we have some contingent offers. They could go ahead and sell their current home, rent another home, and then just go back and buy, another home later. But that's difficult because you got two moves. Or if they have some funds that they could use for the down payment on the new home, they could go ahead and buy the next home using, deplete their savings or investments or whatever they have. And then they're going to have two payments until the next home is sold. So there are two major obstacles whenever we have buyers who are trying to buy first or buy before they sell. The first one is, in many cases, they're going to need the equity from their current home in order to have the down payment and the closing costs on the next home. And that's typically what you think about when you think about, what a bridge loan can do. We have some clients that do have some assets and maybe they could do, a small down payment or even a 20% down payment on the next home without selling their current home. But we have a lot of folks that don't have that as well. Perhaps the bigger option is, or the bigger obstacle is number two there. We have a lot of clients where even if they could come up with the down payment and closing costs on the next home, they still have to be able to qualify with two mortgages. So if they have a mortgage on their first home or their current home, maybe they have a mortgage and a HELOC. Now you got to throw another mortgage in here and they have to be able to qualify with all of this put together. And that usually is the major obstacle for most folks. So a bridge loan, I think y'all probably kind of know what a bridge loan is, but bridge loan is typically a short-term financing tool that's on your current mortgage that helps you. Typically, the function of the bridge loan is to allow you to pull money out of your current residence or pull that equity out of there to be able to have the down payment and closing costs on the next home. So it kind of bridges the gap between the current home and the next home. So we're talking today specifically about the Fairway Bridge Loan program. And here's a few things I want you to know about this program because it is kind of unique to us. First of all, the buyer or buyers must have a Fairway new purchase in process. In other words, we don't offer the bridge loan program as a one-off or a standalone program. We are only offering this to our clients who are buying their next home and they need some help to get from point A to point B. The second thing is that departure residence has to be listed for sale, or at least they have to have a listing agreement signed with an agent. We can do maximum 90% loan to value, which is a lot higher than any other bridge loan program that I've seen. And your max loan amount there is $750,000. And the bridge loan, this is again something that's fairly unique. The bridge loan can be in the first or the second lien position, depending on whether they have a current mortgage right now and whether they're paying that off. We'll get to that probably in just a second. Okay, so I won't go through all this. But one thing to note here is that we only do this on one unit single family residences. So, we can do townhomes, cannot do multi-unit, duplexes or anything like that. And then you can see here a maximum loan to value or CLTV is based on the credit score. So you do need at least a 680 to get into the bridge loan program. And if we're doing maximum financing of the 90%, then, we need a 740 score. Let me also stop here and say the guidelines that we're talking about, this program, since this is an internal proprietary Fairway program, the guidelines have a little bit more flow to them than like if you're doing a Fannie Mae loan and we're talking about debt to income ratio, you might get approved if your debt to income is 49.9, you're not going to get approved if it's 50. So these guidelines are not that stringent, I guess I would say. We kind of look at everything in the whole. So if you had someone, that had a 739 score, maybe we could still get there if everything else on the loan file looked really good if we were trying to do 90% LTV. Okay, max loan amounts here are 750 if you're doing first lien position or 300,000 if we're doing a second lien position. And the maximum debt to income ratio is 45%. So that's really, really important, because that is one thing that can kind of torpedo if we're high on on the DTI. Again, let me say that's not necessarily a hard and fast rule. If the loan file is great and you've got somebody that's got an 800 credit score and we're at 46 on the debt to income ratio, could we make that work? Maybe. Some of this stuff is subject to underwriter discretion. How am I doing on time? I'm at 12:08 right now. Okay. So here's where it gets really interesting. So typically, when you think about a bridge loan program, you're doing a bridge loan as a second lien on the departure residence or a HELOC or something like that. And the purpose of that is to pull the equity out of that home to be able to put it down on the next home. But you still got the payment on the first mortgage if there is one. You still got the payment on the HELOC. Now you got a new mortgage payment as well. So you got three mortgage payments. So in our case, we can use the funds, or you can use the funds from the proceeds from the bridge loan on the down payment and the closing costs on the new home as expected, but you can also use it to pay off that current first mortgage. So we can eliminate the first mortgage that they have right now. And as you'll see, as we get a little bit further into this, there are no payments on the bridge loan. So the client does not have to qualify with two payments anymore. Here's another thing that's great: debt consolidation. You can actually use the bridge loan proceeds to consolidate debt or to roll other things into the bridge loan. If you had someone who had $1,000 car payment or whatever, and that was pushing their debt to income ratio over the top and they couldn't qualify, you could use the bridge loan and you could roll that auto loan, if everything else works, credit score, CLTV, and all that stuff, you could roll that auto loan into the bridge loan and get rid of that payment as well, so that they don't have to qualify with that payment anymore. You can use bridge loan proceeds for reserve requirements. That's unusual, but if we were in a situation where we needed some reserves to make it work, some of the loan programs, it can help you strengthen your application, particularly FHA, if you have some reserves, a few months of reserves. The borrower cannot take cash in hand, nor can they use any of the bridge loan proceeds to do repairs or anything like that. I always try to explain to my clients, none of the bridge loan proceeds can touch your hands at all. You got to be paying off stuff, or we've got to be, we're going to take those bridge loan proceeds and we're going to go right to the next closing with them. A few highlights here. So everybody asks, what's the rate on the bridge loan? Clients are always interested in this. At this moment, today, the bridge loan rate is 7.25%. That's a fixed rate. Although I would say to the clients that ask that question, I'm not sure it's really important what the rate is, because this is a short-term deal. This is not meant to be a 30-year deal. You're only going to have this bridge loan for just a few months, because the expectation is you're going to sell your house and you're going to pay the bridge loan off. So as you can see there, it's a 6-month balloon loan on the term, no monthly payments. It's fully repayable. This is not some kind of a deferred or forgivable loan like you see with the bond loans, North Carolina Housing, or anything like that. And the interest does accrue, even though they're not making payments. The interest does accrue, and that's to be paid off whenever the house gets sold, and it's paid off at closing, or once the house gets sold and the bridge loan gets paid off, the accrued interest is paid as well. So a couple things here to be mindful of from a regulatory standpoint. This is considered a refinance. Actually, it's considered a cash out refinance. So, we're going to close the bridge loan along with that purchase loan. We don't want to close the bridge loan early, because you don't want to start that 6-month clock ticking until you have to. Plus, there's really no reason to close the bridge loan early, because we don't need those funds until closing of the new purchase loan. And it is, as I mentioned, it's considered a refinance. It's subject to a 3-day rescission. So typically we're going to close the bridge loan about a week ahead of the purchase loan, so that those funds will be available for the purchase transaction whenever it comes around. This is actually the first bridge loan that I've done. And like I say, I've tried a bunch of these other buy before you sell programs, haven't been able to get any of them to work. The bridge loan, I probably have done 6 or 7 of those, I would say, right now. But this is the first one that I did. I had some clients in another state who were trying to move to a different state, and they own their current home. which was valued at 350. They were purchasing a new home for 425. They had some money that they could use for the down payment. But the problem was they could not qualify with their current mortgage plus the new mortgage. They needed to sell their current home. This went on for a year or so. Just could not. They kept trying to make contingent offer after contingent offer, could not get anything accepted. None of those offers accepted because their departure residence wasn't at that point. It wasn't even listed or anything yet. So they were just kind of banging their head against a wall on that. So we went in, we did the bridge loan, and we've had a bridge loan for quite a while, but we just enhanced it back in I guess I would say the winter, late winter, early spring, changed it around to match the parameters you're seeing here. So what we ended up doing, was, let me go back here. We did a 90% bridge loan at 315,000. We paid off their existing mortgage of the 173, and then they still had enough equity left over to do a 25% down payment on the new home. So we got them. They relocated from state to state, bought the new home. They did not have to do a contingent offer, and they were able to get their offer accepted without the contingency. They didn't have to do the whole sell our house and then go rent somewhere and then buy the other home and move in there, the whole move twice thing. So just to kind of wrap up with the PowerPoint, here's the things. Again, there's a whole bunch of other programs out there. I know there are other lenders that have bridge loans. I haven't seen anything quite like this. It seems fairly unique to me. But the unique advantages of our program are that there is no monthly payment. So you got a 6-month term there with no payments. We don't have to count that payment. They don't have to qualify with the bridge loan payment. We can go up to 90% loan to value on the bridge loan, and you can use bridge loan proceeds to pay off your existing mortgage, or you can also consolidate or roll other debt into the bridge loan if you need to do that in order to qualify and eliminate those payments and improve that debt to income ratio. And then there's no reserves required on the bridge loan. That would just be if there were an issue with the reserves, that would have to do with the first mortgage. All right, so how about that? 15 minutes. I was right on the money there. Does anyone have any questions? And I'm going to put there we go. I think I've got everybody live and unmuted. Any questions on any of that stuff, or tell me what you think?
And what about the appraisal of the current property to get the value?
Yes, we will do an appraisal. So we will do an appraisal on the departure residence.
And the fee for that just gets rolled into the closing costs for the buyer?
Yeah, that's right. Yeah, that's right. And there may be, so here's logistically the way that works is my team does the purchase mortgage on the new home, but we have a corporate team that actually does these bridge loans. So I'm not as hands-on with the mechanics, although, we work very closely with that team. We work together on the two transactions. But I feel like there might be some provision in there for like if our loan to value is like 50%, and the client only needed to borrow whatever $50,000 to do whatever they're trying to do, then there might be a provision in there where we could do an AVM and not have to do a full appraisal. But all the ones I've worked on so far, we've done full appraisals on those. Yeah, good question. Anything else on your mind or other questions? Or what do you think about this?
Well, I think for my clients, I know it's looking like it's going to be a pretty good deal to get them moving to where they want to go. So
Yeah. Yeah, I think so too. Like I say, it's been a game changer for all the clients that I've used it with. It's worked out perfectly for them. I see Janet. Let's see. Yeah, absolutely. I will definitely, and I did a recording as well, so I'll send you the recording. I'll send everybody out the recording.
good.
All right. Any other questions? Comments?
No.
So you don't even have to remember all this stuff, all the parameters. I guess the main things to remember would be, you don't have to make a payment on the bridge loan and you can roll in your current mortgage and consolidate other debts. Those are the main things. Other than that, if you have clients that you feel like might work, let's talk or let's get them in touch with me and I can talk them through, how it works and see if it's a fit. But it's worked really well so far. All right, I have 12:18, so I'm 2 minutes early. I want to thank you all for being on here. I'll send you out this recording. If you have questions about this or you want to talk through it further, let me know, and I'll be glad to jump on a call and do that.
All right.
Uh,
Thanks, Tim.
yeah, thank you. Have a great rest of your day.